What is going on, guys? Happy Friday. So we're going to be going over some of the trades that I took over the week because I think a lot of these are really good examples that you could put into your brain because the more you see things, the more you're going to start seeing them live and then be able to take trades like this on your own. And that's what we're all here for. We're all here to learn. We're all here to get better. And this is just really nice, structurally clean charts where I'm looking at opportunity in individual tickers that provides much better risk to reward than the overall market. The individual tickers have really been the way to go. Um, we also had a data packed week, so I really wasn't even too worried about trading much, but there was some charts that weren't really to be ignored, and I took advantage of them. So let's get into it. Let's talk about some fundamentals of like simple imbalance trends, sector rotations, stuff like that. This is in the initial sector rotation within FSLR, right? It's a very imbalanced trend, right? Whenever you look at these candle spreads with little to no seller on the top, little to no consolidation, just a pure squeeze where things are getting a little bit extended, right? You're getting this massive rotation where the equity kind of marks up way more than what it should be for a healthy trend, and you see a 55% move within 15 trading days, right? That's not constructive, especially this is the only healthy consolidation, but then whenever you look beneath you, this was all basically, and whenever you look at like distribution patterns, guys, they all happen in different schematics, different time frames, and different like amounts of time, right? Whenever you look at something like a bull flag here that went for the expansion, it got the expansion. This was all pretty much just preliminary distribution that was happening into the upthrust that then failed, got beneath the bull flag, failed the bull flag, and then started to fail in total, never found a higher low and just recorrected itself into this bounce trend, right? So this was all a lack of consolidation, probably more of like some sort of short squeeze. So whenever we recorrect ourselves lower, what we're simply looking for is for this buyer to potentially reappear after they collected all of the excess liquidity that is sitting within these candles, right? Whenever you look at these massive volume candles with a crazy spread behind them, institutions, guys, they like to trade on the bid, which is beneath the spot price of the underlying for the time being, right? So whenever you are squeezing, let's just say, that is a lot of market order action. That's a lot of really parabolic price movement. So whenever you think about like consolidation, healthy pullbacks, those aren't collecting the liquidity on the bid side whenever there are buyers who want their orders filled at prices beneath the current price, which are just passive buyers. So that's why trends like this are relatively unhealthy. Ones that lack consolidation, ones that lack retests. And as you guys can see here, we kind of just broke right through the all-time high, got a high tight inside bar with little to no, constructive retests of anywhere, and then we just got the immediate expansion with another 10% move on the underlying, right? So things are always going to be pulling back, and what I mean by this is like these consolidations here after major kind of moves like this, they're nice to catch at the very early stages, but this is, like I said, likely going to be profit takers in the preliminary stages of a distribution. We have a similar schematic to AMD over here where everyone thinks that this is accumulation, and I guess they were right for the short term, but all this really was for an upthrust and for a passive seller to then fill a lot more of a serious amount of orders, as well as those sellers also having the exit liquidity on hand from buyers because retail oftentimes likes to chase those breakouts after rotations have happened like this, right? You go over to something like XLE, right? People love to chase the breakouts at new all-time highs. We caught the rotations over here. This was a very outlier strong trend. But yet again, this was very overextended for the energy sector, right? So whenever we target into these all-time highs and then it looks like we're getting a clean breakout, all it really does is break out for a few days or a week, and then it tries to get the retest. And then this is whenever a seller started to really step in. As you can see, the volume started to really get high here, followed by a higher low attempt from buyers that was on weaker volume, and then a stronger sell from sellers that was on heavier volume, right? So and then this started to recorrect itself way back into this whole imbalance type of trend. This is the same general concept with EMPH. The charts might not look all the same, But if you're not catching the rotation down here and over here, wait for the recorrection because that's just fundamentally how mega caps, large caps work. And then you'll obviously look for buyers to either reevaluate this and then repurchase the equity that they purchased from over here. Same general concept with like FSLR whenever you're looking at these massive rotations where, okay, the buyers started from down here. Are they going to, they're going to reevaluate what they purchased previously? Are they going to reappear here? Is there going to be leftover orders sitting within here that start to cause an imbalance? We don't know, but let's just wait for price to unfold. Let's see what happens. And if they want to redistribute it, they can, but this is a very good risk to reward long setup because sellers are not strong here. This was more or less just a really tight consolidation that led to a breakdown failure, and then they ripped it back up above into the range. Seller tried to put in a lower high on the daily. He failed. There was no volume there, right? So this is going to recorrect itself higher. And now what we would be looking for is a path of least resistance. And what I mean by that, guys, is a path of least resistance is whenever you have a test of a resistance so many times to the point where there's no more resistance. There's no more sell orders. Picture it like this, right? Like you have a resistance at 232 on FSLR and you unloaded 200,000 shares here. You only have a million shares total, right? So you unloaded 2,000 shares here, or I'm sorry, 200,000 shares here, 200,000 shares here, maybe 200,000 shares here. We're at 600,000, another 200,000 shares here, right? So whenever it pushes back up into this resistance for a sixth time, there is only 200 more thousand shares that you have to unload at where your ideal range to unload them at is, right? So um, what I mean by path of least resistance would just be eliminating sell orders on several consecutive tests and kind of monitoring that resistance and being able to see through the volume, through the candle spreads, that this resistance is likely going to give up, especially whenever we're closing near the highs. And this should break through 232 and find another nice upside move. I would like to think we get up into the 240s by next week. But yeah, that's a model of a path of least resistance. I talked about that before actually even putting out the trade. Um, so that is kind of similar to something like XLE, right? You go over to XLE or ZOM. We'll actually use ZOM, it's right over here. And ZOM had this really nice, strong looking gap progression level from right over here that started to reclaim itself. You get these lower lows that are being bought, right? Here's a lower low being bought, here's another one, and then here's a third, right? And then after that January OPEX, we started to rip our way higher, started to see a clear, strong buyer here. It claimed through this bear gap, and then once we got through that, we kind of just flagged out on top. And then we also tested a flat top resistance for the tested it for like weeks on end over here. Another time, another time, another time, another time, and another time, right? And as you guys can see, the progression from sellers is getting weaker and weaker and weaker, and it's carrying out high, tight ranges into that resistance with little to no candle spreads that are really alarming, right? So this would be a different little, example from over here, right? This is a really strong candle. This is an ugly candle, and this is a massive weekly level, right? So I still think something could definitely be brewing within ZOM up here on like a weekly path of least resistance off of like this 119.63, but I don't know how long that's going to take, nor do I care. I'm just kind of trying to show you where the sector rotation was established from, right? And then we got the imbalance trend, and then we recorrect our way lower whenever we fill most of the imbalance out of this whole entire trend and these little hidden bear gaps within the trend itself. That's whenever we put in a swing low, and then we start finding higher lows after, right? This is very similar to something like EMPH. EMPH was a sloping accumulation, so that means, you know, you have lower high, lower high, lower high, sector rotation failure, comes back down, new lower low, that lower low being accumulated, right? This is one lower low, it's bought. Two lower lows, hammer candle right after earnings. What it led to was higher lows after, right off of the gap fill. So you get higher low, higher low. They went for the expansion, up thrust, recorrection lower, new lower low, it's purchased, high or low, right? So that's all I'm really monitoring whenever I look at the daily chart, and I also understand how this is just one massive sloping accumulation. Price covered over time really does start to favor the fact that, okay, sellers really have no effort of pushing this down much more, because why would you sell your EMPH shares whenever big money, big forceful money is kind of loading on these reports, right? Doesn't matter if they're a miss, right? These were two revenue misses. It doesn't matter at all. All you need to really understand is what the equity does in terms of how much does it move up or move down, because that kind of shows you the intention from the buyer or seller if we were to mark down. In this case scenario, we're marking up double digits, double digit percentages, right? This was a 12.8% move on the equity for this given day with 14.75 million volume traded. As you guys can see, relative to the rest of the chart, that is massive volume. Come over here, same general thing. Huge volume, 16.86 million volume traded with a very beautiful, almost a 17% move on the underlying, right? So whenever you see a sell climax that's kind of being established with lower lows being purchased into the bottom of a bull gap, and then you see a new lower low being put in place, it's getting bought, and then you see a higher low afterwards, that's whenever you could start looking above you, right? Because we have the bottom range of this whole extreme being accumulation. Now we have to monitor the upper range for path of least resistance, for the expansion, for the change of character, for the higher lows to start building out into the expansion, right? For us to test now into the upper range, right? 135 and potentially even higher. So that's what I mean whenever I talk about path of least resistance and sloping accumulations. A similar schematic to this would be BABA. You go over to BABA, boom, what do we have? A massive bull gap. What happened afterwards? Sellers took several weeks to send this back down into the bottom of the simple 1 day move that bulls made. So all we're really monitoring here is, are bulls going to repurchase what they purchased before? Are they going to protect their progression? This was 60 trading days and finally filling the progress made by 1 trading day from bulls, right? So as you guys can see, we saw the massive expansion, the massive move after. Same general concept over here with like FSLR off of filling the whole entire imbalanced trend, or EMPH filling the gap and then finding higher lows afterwards. We did nail this rotation right over here. The swings that I had went absolutely crazy, and that's what I'd be looking for again, right? So we have a resistance that's kind of being built off of this June 18th to June 20th bear gap. Um, and what do you think this candle did here, guys? After all, this is just all an auction, right? Sellers used a lot of ammo here, meaning sell orders. And then whenever you get massive volume trading like this into a low volume sell as the result, what you could really conclude to yourself here, guys, is that there was a buyer that stayed strong here with the daily print kind of closing towards the upper ranges of resistance, really heavy volume, followed by a weak sell. And then we get a fill of this bull gap, a hold of it, and now we're going in for a triple top resistance touch. Back to the analogy of just simple inventory. If you have 500,000 shares to unload on EMPH here, and you want to unload them off of like 119 to 120-ish, and you load 200,000 here, 200,000 here, 50,000 here, you're at 450,000. There's only 50,000 more shares to unload here. And we can monitor this through candle spreads, through volume, through the result that is established within the chart. Sellers are making no result up here, right? This is no volume. There's nothing. Everything's kind of drying out up here, and it's getting the healthy, constructive consolidation for the expansion through this level. So that's exactly what I saw, and I took some EMPH calls today, right on this little 15-minute like consolidation type of look whenever the volume got really dry at noon. And then I did the same thing with FSLR. I had FSLR right off the open, and then I was able to profit roll the whole entire FSLR position, plus a little bit more, after we saw this really nice, clean consolidation type of look. So here was the initial FSLR trade, a little delayed here, but I sized into some FSLR longs. It was at 9:45 in the morning. We go over to 9:45. It's kind of as soon as we get back above this little gap where everything's kind of being established off of. Okay. Here would be 9:45. Really never saw any sort of drawdown, and then we saw a really nice expansion on heavy volume after that. So this was a really nice trade to kind of just target up into lower high territory, this little trend on the hourly, this little channel on the hourly. And then I'm just simply looking to roll profits whenever we get a really nice strong candle like this, followed by little to no sellers afterwards that are retesting ranges that need to be held. We saw a really nice bull flag on top of this. And one thing that I want to mention, guys, is a path of least resistance type of model. Every schematic is not the same, but let's just talk about a flag or a channel, right? Whenever you have a really nice mark up, say the swing low is very pivotal because the swing low is covering a whole entire sector rotation, filling a bull gap, retesting a massive daily level, whatever it is, right? Doesn't really matter. But whenever you're looking at this from lower high by lower high, and then new lower lows, lower highs, new lower lows, and then they try to create some sort of internal resistance. They send it for one more new lower low. Say that this new lower low within this flag is kind of like, okay, filling the bottom of a bull gap from over here. It fills it, it breaks back above, it retests, puts in a higher low now, and then sees the expansion. This would be the change of character. This would be the break of structure. Right over here, we are holding internal resistance as now a new support, especially if this move higher is on really nice, clean, strong buying volume, really nice, clean, strong candle spread where it's closing near the highs. There's no sign of a seller really within the tape there. And then the retest, if it's especially on low volume, maybe some hourly inside bars. This being an hourly strong candle, followed by like two inside bars here on the hourly, really low volume for a retest for a higher low off of internal resistance. That's whenever we could start looking for like the channel and like flag expansion, and then eventually the expansion above the flat top resistance, right? So this is what I meant by internal resistance being established, it being broke, really nice strong candle, a lot of volume, followed by little to no volume, right? Too high, tight. It's a high, tight hourly flag, meaning really nice move higher, followed by tight consolidation at the upper range of that move, right? So that signifies a lot of strength. That's exactly what we saw. So I profit rolled this thing right off of that spot. And this is also what I was sharing over here within the Discord. FSLR 1 hour, if you'd want to roll profits and grab a small position, this is the internal range resistance that needs to be held as support and flag out on the hourly. As I've seen this schematic time and time again, 3 lower low, 1 hour flag into retest and go, right? So 3 lower lows kind of, and then we get like a double bottom type of look followed by, like I said, we filled the whole entire gap. We gap back above the gap and then we held it. We saw the expansion. We took out a resistance. Now we're testing into upper ranges of the extreme, finding little to no volume, suggesting that there's not enough of a seller here to push this thing back lower. We're testing into the higher time frame resistance that's up here, guys. So if we find the hourly flag, especially if it's a high tight flag with the pullbacks being into this internal resistance to find a higher low off of, that could be a really nice risk to reward trade for a nice swing, right? So we caught this move right over here. And then this was a really nice fill that printed like a 6R trade, and it's still not over. So those are the type of trades that you need to be taking in terms of looking for very, very good risk to reward. Doesn't even matter if they fail. If it's good risk to reward, there's nothing to really be ashamed of, especially if you're following the actual risk that you have within your plan. So that was the FSLR trade, and then I had a pair trade with EMPH around the same exact time. This is a little bit different of a schematic, but it's building out tight structure at a resistance with very, very dried up volume, and we're kind of just claiming the consolidation at like 119.88, 120, and we're getting retests, consolidations above into nice expansion, right? So I was grabbing retests here and then kind of up here a little bit more aggressively into like 121. Very beautiful trade right into like 124. I still have some of those, although I kind of have both right now because I don't know which one's necessarily going to be getting more attention. I think both will do relatively well though. Another trade, Roblox. So I caught the Roblox trade, and this was a very beautiful trade. This was like 100 and something%. Um, so here was, so here was the trade. Another path of least resistance model. Funny how I talk about this. Um, all the time. I took a Roblox breakout trade. That's it. Path of least resistance model. I like to keep it very short and simple because it's very simple in all seriousness. So a couple things that I really like to talk about in terms of like monitoring the auction is one, whenever you have very progressive moves like this, like from a seller, this was a 22% markdown on the equity, followed by a recorrection back up into the tops. And then it kind of rejects this little resistance point from over here with another earnings report. Not a lot of volume, by the way, behind that. So that's one thing that I started to understand. Second thing is whenever you're moving your way lower in a very steep way, a very quick way, and then you automatically rip your way higher and start claiming like these gaps again, the buy side claiming the gaps again, then that's going to really result in a really, really, really nice trade. Another thing that I do want to talk about here, guys, is this is your earnings candle. Whenever you look relative to the rest of the chart, there's not a ton of volume behind this. There's also a wick behind it. We retested back into it. Volume ramped on Tuesday. Okay, and this is a very important concept. This is the this is all about just simple effort and result. Whenever you have a little ass candle and an inside bar that's trading nearly the same volume as the earnings day itself, keep in mind, guys, there was a nice little volume spike down here on this higher low too. But anyways, regardless, whenever you're looking at this, guys, and it got a quick little undercut and a fake out into a rip higher, and what was happening here was volume was really, really ramping within this general resistance range on a really tight inside bar in the earnings candle territory. This is likely absorbing any sort of liquidity that is sitting here, any sort of seller that is sitting here, and holding the name up really, really nicely within this resistance, right? It's eliminating supply, it's soaking everything, and there was a lot of volume spikes here on when was that? That was Tuesday of this week. Yeah, guys, there was a lot of really nice volume spikes here on Tuesday, and we had relatively healthy action, right? We got a really nice strong close. Volume stayed really elevated the whole entire time, and this was kind of just like consolidating on the hourly right off of the earnings range. And the earnings candle itself really, the price action here was really not that bearish. So this was a quick little undercut back into the resistance. It was trading really heavy volume on an inside bar with the equity being 0.78% red for the day, which is nothing for Starbucks. This likely is going to need that breakout, right? It's going to need the breakout. If you're an EMA guy, you could start looking at, okay, this was a quick little undercut from the EMAs and do a reclaim of the gap, and then it started to just trade heavy volume within a flat top resistance, kind of. and it's just sitting there on heavy ass volume within an inside bar. The next following day, what do we get right off the open? A nice strong rip on nice volume right here. So no matter what way you put it, guys, this is just a really nice strong trade. And if you guys want to take a look, I bought the breakout trade on the 21st at 9:45. We go over to 9:45. Here's 9:45. Boom, breakout of the previous day high. Really nice strong move. And I'm simply just risking this $41 range. Saw an immediate push to 42, and then eventually in the afternoon got all the way up to 44. So basically, I caught, I was trading next week expiration, caught like almost a seven, I caught basically at highs almost an 8% move on the equity. That's insane. Absolutely insane. So I did have a red day this week, but it was all trading light size. I did emphasize this. This was all just trading light size within the day before Jackson Hole, so yesterday. And I actually knew the market was going to pull back. I just missed it. So that's probably whenever I started to um, oh, look, it's funny, guys. I wanted an FSLR. Alrighty, so this was yesterday. I took some meta calls just because I thought the all-time high breakout was going to be there, although I did talk about how bad the fills were, and I emphasized how this was had to be small size, um, and it kind of needed to get over the all-time high or I cut, and then as soon as it popped, I kind of wanted to go into break-even stop territory. This was what I said right off the open. I do think the market could pull back at any second here. Got to stay cautious. So I really didn't have any big expectations. This is just an overall bigger picture seller dominant QQQ tape. My bigger trade for the time being was the KHC long, which is a very basic trade. So I ended up losing a little bit on the meta because I didn't follow the full plan, but kind of what I was just looking at was this tight consolidation above the earnings candle high. I knew the market could pull back. As you guys can see, Thursday. I said that at 9:45. This was Thursday, 9:45, right? So, um, yeah, 9:44, right? So, I figured the market could pull back at any second at like right here. So we did see a move from 484 all the way down into 474. $10 move within QQQ, which is pretty bad. But I grabbed some meta calls as soon as we started to break through this and I saw the volume. I took some calls within this candle. And then I saw a little bit more upside into the all-time high, and then we started to fail the all-time high. It was on low volume, so I decided to stay in. And then I said, you know what? If this doesn't start getting the expansion right off of the intraday 618, I'm going to cut this. And then it kind of just failed here and got a lower high look, and volume really died out. And this was now becoming more of like a false breakout sweep type of trade than it is anything else, and that's exactly why we gapped up. It gapped up with the general market today, and it was relatively weak, right? So I actually planned to want to flip short here, but then I said, you know what, I'm cutting this because QQQ can reverse. So that was a very weird spot, but I managed risk very, very, very properly. This is why I said yesterday at Thursday, looking for QQQ calls. I did size into some QQQ calls. Right over here, this is a simple progression trade where you have this massive bull gap and then the resistance kind of being established here. What happened was we just tested into the bottom ranges of it. This was all just one massive bull trap right before Jackson Hole, which a lot of retail was really bullish on for some unknown reason. Doesn't really matter that this has historically crashed the market. That just does not matter. So yeah, I mean it was basically a flat day because I opened up to some QQQ calls for 60% the next following day over here. So with that being said, that was the trades there. I also do have KHC longs that are green. Um, Starting to get the expansion today. Really nice heavy volume pops, followed by retests into the bull gap, lower volume, heavy volume pop again. Very basic trade there. Um, I also did swing Tesla into Monday for a really nice win too. Don't even really want to talk about that right now because this video is already 30 minutes long. I've already shared some nice examples there. Um, and yeah, that's about it, guys. I mean, there's really not much more to talk about. I did have some other trades in between, but these I try to share the highest quality trades that I take because I think those are the best examples of things that you guys need to follow, things that you guys need to look out for. Roblox was really nice, FSLR, EMPH really nice. Even the Tesla trade that I had was pretty damn good. KHC's looking good. These are all trades that really allow you to trade less but make more just because of the really nice maximized risk to reward. Um, I also did short IWM on Tuesday. It was a simple test into like this little bear gap fill on Tuesday, and it was kind of weak right off the open. Um, so yeah, I took some puts within here, and then I scaled a lot at I even said right over here, not letting this go red and realizing some right off of 212, 820, 820. Yeah, so August 20th at 104. So right around here was whenever I was like, okay, yeah, time to realize some profits because this can definitely dig its way higher all the way up into the entirety of the fill. And then this saw a really nice strong move on this day with really nice volume behind it. So that caught me off guard a little bit, but I'm not even worried about that because that's not what my trade plan was. So yeah, that is about it, guys. Um, I had a I attempted like a 7-hour trade long on AMD on Thursday. What I was kind of just looking for was this to turn into an hourly hammer and potentially start reversing. That's why I had that QQQ call swing at the bottom here. Um, but I got a really nice fill, and what the fill basically was off of was the earnings candle. So what I did was I sized in kind of as we started to like base and go. Popped green a little bit, but then I figured we have to get above the purple line, and then we didn't. We started to fail, and that's when I was like, okay, yeah, I'm getting out of this, which was basically nothing. It was like a wash. Um, didn't really even, I don't even know why I'm talking about that one, but yeah, those were some of the best trades that I took this week, guys. If anybody has any questions, please let me know. And like I said, try to follow the trades where the risk to reward was very, very favorable. Those being like KHC, Roblox, FSLR, maybe even like EMPH, and then maybe the Tesla swing. The Tesla swing I swung green into the new week. Okay, so we're right over here. This was Thursday of last week, I believe. This is whenever I was in, or I was actually in on this little retest over here. which was the earnings candle low. And then I opened up into Monday. I was actually long last week, and then this week was Tuesday. If we go take a look at Tesla, I was long Monday into Tuesday. Yeah, so I was long last week and this week, but this week's swing was Monday into Tuesday. Um, Here is the execution here, overnight of my Tesla. Um, I really wanted 226 on this thing. And why did I want 226? Just a simple gap range, covering a lot of this candle that looked a little imbalanced, in my opinion. To find a daily lower high to potentially move lower. And another thing was Monday kind of closed us above this nice progression range from right over here. So that's whenever I said, you know what, I'm looking exactly for 225, 226. And we got some failure, a gap up, and then some failure right off the open, and I scaled. So that was a really nice opportunity there. And yep,